When you purchase a bond from a company, hold on. Well, crap. All right, so when you purchase a bond from a company, you are lending the company money which it promises to repay with interest by a certain date. Okay? Everybody good on that? And I'm pulling this up. I should have made a copy of this already, but that's okay. Download PDF. Okay. Then, on the next one, what'd y'all get for that one? Inflation. Okay. When inflation increases, the purchasing power of the dollar decreases, which impacts how much you can buy in goods and services. All right, number 3, investors can purchase shares in an actively managed mutual fund, which pulls money from many people to buy a diversified portfolio of stock, bonds, and other securities. Okay. Shared AFA. 2024, Unit 6, redo. Like, well, these aren't even all of them. I just uploaded this. I don't understand why it's giving me a problem. Okay, well, it is what it is. All right, number 4. For someone like Sarah who prefers a hands-off approach to investing, a what? Okay, robo-advisor can automatically manage her portfolio based on her risk preferences. Okay, hey, babe. A retirement saving. She's not here. Yeah. Okay, a retirement saving option that automatically adjusts asset mix of your retirement date approaches is known as a target date fund, TDF. Mike uses the strategy of dollar cost averaging to minimize the impact of the market's ups and downs. He invests the same amount of money at regular intervals over time. Love a good iPad thing. Okay. All right, number 7, the interest calculated in both money you've invested and the accumulated interest from previous periods is known as compound return. Compound return.
What's the difference between that and rate of return?
Rate of return could be talking about the overall, like, how much money you're making back, like the profit. Compound is just like the interest that's calculated. Okay. Number 8, to reduce the risk in her investment portfolio, Emily uses the strategy of diversification.
What is this? How's it not the next one?
How is it not what?
How's it not the next one?
That's not a strategy. That's a thing she can invest in. Making sure she invests in a variety of assets, like, so the key word here is variety. Okay. We didn't talk about this one much, but in a traditional 401k, employees can contribute portion of their salary on a pre-tax basis, which is then invested for retirement savings. And then when a company makes a profit, it may choose to pay part of those profits back to its shareholders in the form of a dividend. All right. Describe the differences between investing, saving, and trading. Here's the ones that I have. So investing is for long-term goal. Saving is for short-term. Trading is for short-term. For assets, this normally looks like stocks, bonds, and variety of funds. For saving, it could look like cash, T-bills, money market accounts. And for trading, it could also look like stocks. For investing, the goal is to outpace inflation. For saving, the goal is to purchase or create emergency fund. And then investing can be risky. Saving is low risk. And trading is high risk because you don't know what's going to happen.
Investing is also high risk too.
It can be risky. Okay, number 12. A bull market is when more investors are buying stocks, which causes stock values to increase. Remember, bull goes up, bear goes down. A bear market is when investors are selling stocks, which causes stock values to decrease. What is an advantage of using a robo-advisor to invest? It does tedious tasks more frequently. Okay. Charges lower fees. And customized to your needs. All right, go ahead and try 14 through 19. Go ahead and try 14 through 19. 14 through 19. Okay, so identify whether each statement is true or false. Social Security is a government program that pulls contributions from current workers and then provides retirement supports for those who are eligible. True. Okay, remember, you will be paying for old people. You will need slightly less income in each year of retirement. False. Okay. The longer your retirement, the more money you'll have to need to have saved.
True.
Okay. The longer your retirement, the more money you'll be able to withdraw each year. False.
True.
False.
Wait.
Laura wants to start investing and is eager to buy and sell individual stocks. Why might this be wrong for her to start doing? What do you suggest she does instead?
Because she should know about what she's doing first. And she should, what I suggest she should do is go talk to a financial advisor.
Okay.
Or do penny things, acorns.
Acorns. Okay. So she should either go to a professional who can help her beat the market or just have that conversation, or she could go invest in an index fund that will diversify her investments. Identify 3 things that will impact the stock's price. So, supply and demand. Okay. News about the company. And anticipation about upcoming events. So like when Apple comes out with the next iPhone, their stock goes up. Or about to come out, stock goes up.
What's the second one?
Second one is news about the company. Stock splits also impact the stock's price. It doesn't change the value of the company, but it does impact the stock share price. All right, so we're going to match the following terms with their definitions. So stock is going to be an investment option that allows you to own a small piece of the company. That's number 3. Stock quote is going to be the price of a stock that is listed on an exchange. And then stock split is going to be an action where a company increases the number of shares outstanding and lowers the individual value of each share. All right, active investing versus passive investing. Active has a human overseeing it, but it does have higher fees. It's higher risk. And goal is to outperform the market. For passive, it's done by lower fees, matches the performance of the market, it's lower risk, Okay. The one difference between an IRA and a 401k, again, we haven't talked about this super in depth, but it's a good preview for next unit. The difference between an IRA and a 401k, a 401k you do through your employer. An IRA you do by yourself. Annual contributions is lower for an IRA. For 401k is automatically deducted from paycheck. A Roth, or an IRA, you physically have to put it in yourself. A 401k, your employer matches the contribution up to a certain amount. All right, go ahead and try 20 through 26. Go ahead and try 20 through 26. Okay, so a mutual fund is something where you pull money from many investors to buy a diversified portfolio. An index fund is going to be that it aims to mirror performance of a specific index like S&P 500 by holding all or most of the securities in the index. An exchange traded fund is going to be, can be bought and sold on the stock market just like individual stocks. And then target date fund adjusts its asset allocation and risk level over time based on specific retirement goal dates. Okay? In your own words, explain what a brokerage account is and how it's different from a bank account. We had a lot of this yesterday. So brokerage is an investment account. You link, well, it's kind of like a bank. You can add funds. The brokerage, though, allows you to buy stocks, bonds, etc. How does an investor make a profit from investing in a stock? They make money by selling the stock. When price increases, they receive dividends. Why is it important to invest for retirement? Well, investing has the potential to earn a higher rate of return. And you cannot rely on Social Security or pensions. There's a whole rumor that Social Security is going away. And it might by the time y'all get to retirement. So, sorry. Okay. That is a thing though. True or false? Roth IRAs are a good option for people who have relatively lower incomes and tax rates compared to what they expect to have in the future. Roth IRAs are good. You definitely want to take advantage of it, and that is a true statement. The benefit of starting early to invest.
You'll have more time to gain money.
Okay, so the more you'll benefit from compound interest, right? So the longer it has, the better off you're going to be. Okay. How can diversification help lower your investment portfolio's risk? Making sure that you have your stuff spread out. If one asset doesn't do well, you aren't tanked because you have your other ones. All right, so if one asset doesn't do well, you aren't completely tanked. All right, go ahead and try 27, 28, 29. We're going to do this quick. And then if you're needing to take Okay. So 27, explain how someone who does illegal insider trading has an unfair advantage over the other investors. So illegal insider trading gives investors with inside knowledge on an unfair advantage compared to the average investor, as they have the potential to make more profits using the inside knowledge. Okay, so if you're an inside trader, okay, so that basically means that either you're like working for that company, or you have like the predictions for the market or something like that, or you have influence on the market, then you're gonna make more profits than just your average Joe who's trying to do investment.
How
Okay.
would we know though?
What do you mean, how you'll know?
How would we, like, even if somebody told me, hey, invest like all your money into Apple right now, they were about to put on something, like, how are they gonna know?
So like, little brother is financial planner, right? Let's say all of you are his clients. So if he gets all of you to invest in a certain company, he knows it's going to do well because he's pushing it. So he's having influence on the market. Does that make sense? Okay.
The other more common way though is, it's called insider trading because someone inside the company has knowledge.
Okay.
So they know what the quarterly results are gonna be, they know they're gonna make a huge profit or a huge loss. That's inside information that the public doesn't know until the quarterly results are announced on the market. So if he knows it's gonna do really badly, for example, he could call up his cousin and say, hey, you wanna dump your stock now because it's gonna tank when the results come out. That's insider trading and it's illegal. And
If they
it's
find
illegal.
out, right? Because it doesn't seem that hard to like figure it out, right? Like, it seems like,
It's highly protected. The company's results, no one is allowed, even within the company, only a few people will know, like how Apple are gonna do this quarter.
okay, good.
It's
Then-
very protected information.
Okay.
And
And
if you're a company employee, you're not allowed to trade stocks within a certain window before and after the results are announced.
Okay.
So it's kind of just like unfair advantage. Okay. All right. Investors often try to minimize the taxes they pay by holding investments for a longer time in order to pay a long-term capital gains tax. You're trying to figure out what the purchasing power of your money will be. Should you use the real rate of return or nominal rate of return? So when considering your purchasing power, it's best to use the real rate of return. This is because the real rate of return takes inflation into account. All right, so if you are needing to take a quiz, go ahead and take out your laptop, which you probably all have out anyways, and then go ahead and go to peer assessment. If you aren't, then you are going to join this Kahoot. Yay, Kahoot. Yes, go ahead. Yeah,
Can I take my first time?
say again.
Can I take my first time?
Yeah, that's fine. Okay. So, yeah. Yeah, I'm gonna post it. Give me 2 seconds. Okay, so go to the Kahoot, joining the Kahoot. Yes, go ahead. And give me 2 seconds to pull it up on the screen. Well, I had it open. There we go. Okay. Post live. Okay, so you're gonna join the Kahoot at www.kahoot.it, and the PIN number is 753112. So go ahead and join.